Okay, so good week for the market. Let's take a look and just recap what happened last week. If you look at the SPY, let's head up to the weekly chart here and kind of zoom in here. We can see that the SPY, pretty good week for the SPY. Looking at the weekly chart, we closed at highs for the week. I always like at the upper time frames, guys, that you see these little tails here. So we have a little tail on the weekly. So weekly chart's looking good. We made a higher low, made a higher high. All the moving averages pointing up. A little bit less volume, which is to be expected in August. Okay, so if we go to the monthly chart, kind of zoom in here. The monthly chart, as far as what we got going on from so far, same thing, just 1 week into August. We're coming off a very strong prior month, which was July, which historically we talked about was the strongest month during the year for the market. So monthly chart, all systems go, looking green. Weekly chart, all systems go, looking green. If we filter down on the daily chart, again, finished up near highs. An all-time record close for the S&P. So pretty good looking. It looks like we're breaking out of this consolidative zone. If we go down to the hourly, you can kind of see it, right? So this node right in here that we've been talking about, this high volume node, we finally on Friday were able to break out of that. We're above the 200. We're above the 20. Riding it pretty nicely, made a high, kind of pulled back a little bit into the close, but nothing really to write home about. So, this is a pretty significant break out of this high volume node in here. So, the one thing I do want to talk about going forward towards next week. So looking at the weekly chart, technically, yes, it's green. So really all four charts that we look at to kind of identify the direction of the indices, especially, looking at the SPY, all four charts, all in the green, all looking good, all slating for continued strength going forward. But the one thing I do note, and I don't have time really to pull up the market structure, actual market structure report, but, looking at market structure, breaking out of this type of long consolidation, this high volume node that we've really been in for a while, you'd expect a lot bigger break. You expect it a little bit more volume. You expect a little bit more traders to be coming in. Now it is August. It was a non-farm payrolls Friday, but still you expect a little bit bigger break. Didn't get it, so that could point to more weakness. Typically that could point to more weakness, and of course if we did break back down, you would really target the bottom of this zone as your target point if we did get a breakdown. Now I don't think we're going to have that happen. I really think that the markets have some underpinnings underneath it. They just got through earnings looking very strong. 18%, with most of the S&P 500 companies reporting. Guidance was even strong. That's what we talked about at the beginning of this earnings period. We talked about guidance and whether or not that would be an issue, and guidance has been strong. So not really seeing an issue there. Getting some good underpinnings. We also had unemployment numbers come in pretty decently. The non-farm payrolls report came in better than expected, but under the whisper number. I mean, Goldman Sachs was thinking we'd get a $1.5 million, 1.5 job improvement print, and we did not get that. But still, better than expected. They upped guidance for prior months, which is also strong. So from an economy perspective, the numbers are looking pretty decent. Okay. Now, with that said, let's go take a look at tech. Okay. And let's go up to the monthly chart on tech. And if you look at the monthly chart on tech, coming off a really strong month in here, nice big breakout in July as we expected, and having a good month so far. So monthly chart on tech looking good. Then we break down the weekly chart, and the weekly chart looking good with, a couple tails with higher lows in here. So, we found nice support in here, higher lows, higher highs. But if you notice, tech did not finish as strong as the S&P 500. Got a little bit of a wick at the top, which you would expect given the non-farm payrolls and with the higher interest rates being printed. So, but still, weekly chart looking really good. Daily chart looking really decent. The interesting thing is, we do have this little RSI, kind of divergence here. So this is definitely something to watch out on tech. And, if you look at prior RSI divergences, we've, had a nice little drop in here. Prior RSI divergences had a nice little drop in here. So we are seeing a little bit of a RSI divergence in here. So we definitely, I think tech going forward, even though all systems are going the daily chart right now, above the 9, above the 21 EMAs, above the 50 and the 200 SMAs. So everything looking good technically, but looking at that RSI divergence, seeing if we get a little bit weakness in tech. Now looking at the hourly chart, you can kind of see same thing as we had with tech. As the S&P 500 had this volume node, kind of broke out. But the interesting thing is we kind of broke back down into the close for tech. So we're back, we broke back down, sitting back in this box in this high volume node. So, my thesis going forward for this week is that we could see a rotation out of tech. But, again, what we're going to be looking for is this 368.88 level. See this level be broken to the upside, then that thesis would be invalidated. So I'm very cautious on tech. As far as IWM small caps, I mean, what's there to say on small caps? First off, let's head up to the monthly chart, and you can see. Let me kind of back out of that. You can see this little bull flag going sideways action here. Last month, we had kind of broken down to the bottom of this little channel down here, found support, had a nice big wick. And again, these wicks in the IWM, pertain that it's not going to break down out of this channel. And we have not seen that so far. So far, a little bit of an inside doji, which you expect only 1 week into the monthly chart. If we go to the weekly chart, guys can kind of see this a little bit better. Weekly chart, higher high, higher low. We closed above this midline. Okay. So, we really closed above the 9, we closed above the 21. So technically now in the weekly chart where, we were kind of in the yellow consolidation, this is starting to turn a little bit green. You got these nice little wicks in here. Starting to turn green, and we could see some positive action in IWM from a rotational basis going forward. Breaking it down to the hourly chart, you can see this is the midline that I'm talking about of that range. We kind of broke above it last time. We really couldn't get above here. We tried to get above here, fell back. So until it gets above this 224.65, I'm not a believer that we're heading to the top of this zone. So, again, kind of fell off into the close a little bit. And after, getting a spike. So IWM, really nothing to write home about going forward. As far as the Dow Jones, let's go to the daily chart here. A breakout on the Dow Jones right here. So you get a nice little breakout. We could get that continuation, going. If you look at the monthly, interesting action on the monthly, kind of got this little rising wedge into this top up here. This looks like it wants to break on the monthly. If we go to the weekly, same thing, kind of got this rising, kind of this kind of little cup, and it almost, with this action here, looked like we might get a double top action, but that's really being negated as we're on Friday's action, as we're kind of breaking out here. So all systems looking like go on the Dow Jones. Looking at other issues, oil right here. Let me break this down, get back down to the daily. Oil weaker Okay, in here, you did see the weekly chart definitely weaker. Finding support at the top of this kind of breakout zone. You can kind of see what we're looking at with oil here. Had a nice touch here as resistance, and you almost had a touch here as resistance, right? And then you had a touch, kind of touch in here, and then almost like a breakout up in here as resistance. So, now you're kind of fighting this area that is major, should be major support. So, should we break this 66.50 level, then oil could, definitely a sign. So we're starting to get the first signs of a little bit of weakness. Of course, we're seeing China, the weakness in China from the Delta variant, the supply chains constraints with the Delta going on. You're seeing a little bit of a pullback in maybe demand, but I'm not looking for that to maintain. I'm not looking for oil to completely break down, because I think if oil completely breaks down, that kind of changes the growth thesis. So oil right now was firing a warning shot, but just watch these levels going forward into next week. You can see the monthly chart. We're still, on the monthly chart, kind of breaks it down in perspective. We kind of got back to the pre-corona levels in here. So, now we're obviously from a technical standpoint fighting some resistance in here, which you would expect. So right now, nothing to be concerned about, definitely. And you guys can see, looking at the monthly chart puts in a little bit more perspective of where we are from when the coronavirus hit. You can see the low, and you can kind of look at it like that. As far as Bitcoin is surging. Bitcoin looking good on the monthly chart right there, really nicely so far. Bitcoin on the weekly chart had a breakout out of this base on the weekly chart. This, when you're looking at the weekly chart, guys, this is what you're looking at, right? Nice little break. So we had the break last week. The week before, and then this week was the confirmation, got a little bit of a wick in here. So Bitcoin looking good, looking like it should be bought. Okay. And again, obviously we want to see ourselves hold this 42,700. And this is the Bitcoin futures, by the way. It's not Bitcoin per se. So, but it works for this analysis. So you can see this is a major area, and you can see where Bitcoin is right now, breaking out of this area. So I like Bitcoin here, but it needs to hold, obviously. Ethereum, same thing, actually acting better. You can see Ethereum broke out of here. Let's go to the monthly chart on Ethereum. You can kind of see nice breakout on the monthly. You can see these wicks in here, by the way, guys. Again, talking about the wicks on the higher time frames. And then you can see the weekly. Last week, nice breakout here. It was a nice time to buy Ethereum. And now it's really gapping above an important area here. You can see these touches all in here, as far as Ethereum's concerned. And then of course you can see, where it kind of broke out from back down in here. So nice breakout in Ethereum, next level is this 3,600 level. And then we're looking towards all-time highs. So, Ethereum RSI getting a little extended, but if you see, it can go a lot farther before it needs to pull back. So Ethereum looking strong in here, and I would definitely be a buyer of Ethereum going forward. So Bitcoin looking good. Last thing is really rates. Okay, rates in the dollar and gold. Let's take a look at that. So the 10-year has been the story in here. Okay, we talked about it here. Look at this, looks like a double bottom market. Again, it's running into some congestion up here. This is where it kind of fell off the cliff, this 1.3. And so if it gets back above here, then we can have a bullish thesis on rates again. And that could be, again, depending on how fast it goes, could be a negative for tech. But we'll have to watch it in here. So, obviously, if you look at the TLT, you can see the reverse, kind of this double top in here. Looking at it, bond prices have an inverse relationship. So it's kind of falling off here, guys. And, looks like it's going to continue. The dollar, let's take a look at the dollar. The dollar really strong out of this non-farm payrolls report. So the dollar, looking like it wants to continue, closed really strong. Obviously, with the dollar being strong, we have gold going to be weak down at this level. Expect gold to possibly, continue back down to here, possibly, but gold is tough to trade. You have a lot of times you have a look below and then go, a look below, right, where you think it's going to go and you start shorting and then they go. Kind of the same thing in here, look below and go, look below and go. So, I would not be shorting just off this big bar. I'd be waiting for confirmation, because gold, this is a major level for gold. It's definitely something to, this level is something to be watching going forward. So that's it on the dollar. That's the macro perspective. Going forward next week, guys, Monday we have the JOLTS report. Wednesday we got CPI. Thursday we have PPI. And then Friday we got consumer sentiment. We have Tuesday we got Evans. That's going to be talking. 10:30 we got Bostic. It's going to be talking. So, definitely going to be an interesting. CPI is important. JOLTS, actually is going to provide us some good information, I believe. PPI should give us some good information, and then sentiment as well. Okay, so that's definitely something to take in consideration. So let's look at some stocks here going forward. Let me, sorry guys, I got to reshare my screen in here. All right, there we go. All right, so can you guys see that screen? Somebody just let me know that you guys can see the screen. Anyone?
Yeah, we can see it.
All right, thanks, Simon. Appreciate it. All right, so let's take a look. Look, I positioned some, we're light in positions, obviously going into non-farm payrolls. I had a really good week last week. But we're not going to talk about next week. So what I'm looking at this week going forward is the XLF. Okay, financials look like they're ready to break out. Okay, and again, you got to understand the way to make money in this market is to best understand relationships, right? And one of the purest relationships that there is that when rates go up, banks typically do better. Okay, so seeing this, seeing rates, coming off this double bottom, having good news on non-farm payrolls, which driving rates up a little bit, obviously, is definitely something that is, I think, a trade that's going to work going forward into next week. So we're positioned in a couple of financial stocks, and the reasoning. Look, we do have Jackson Hole. We talked about it at the end of August. With Jackson Hole coming up at the end of August, I think there's going to, and with a really good employment number, I think that's just going to fuel some speculation going into Jackson Hole, and that should keep a lid on bond prices and keep rates going up. Okay. We also had the information that came out last week that a lot of this drive in rates to the downside was a short squeeze in bonds, right? So, we got word that a couple big institutions were shorting bonds, thinking bonds were going to go down with rates going up, obviously. And they got squeezed. One institution had a $1.5 million short that they had to unwind, and that's what you're seeing in a lot of this in here. So given that probably a lot of these funds have capitulated that were on the short side, you're probably going to see now the reversal, see bond prices come off, rates go up. So, and that would be a benefit for the XLF and banks. So looking at that, and looking at what banks that I think are the best banks, well, Goldman Sachs is the best bank. Okay, and this Goldman Sachs, nice chart here, guys. And I know it's not sexy to trade banks and all that, but if you really look here, you got this little top in here as your baseline level of support that I would be trading off of. Okay, so I'd be trading off this level, and that level is 393.26. And you're getting a break out of this base out of Goldman Sachs. You have all the moving averages pointing up, providing support. You got RSI above 50. You know, you had a nice low volume bar. All the moving averages, everything looking good on Goldman Sachs. Now, if we go to the monthly chart, you can see the breakout on the monthly chart from this flag. Okay, nice little breakout. On the weekly chart, you can see breaking out of this consolidation in here. So that's kind of confirming. On the hourly chart on Goldman Sachs, it is overbought from our oscillators level 2. So it wouldn't be surprising to possibly see a pullback maybe into this line. That would be the better trade if we could get that, but I'm not sure we will get that pullback at all. Another good bank, you know, we own, this is the position that we have. We're in JP Morgan. Let's take a look at, you know, the monthly chart, you know, kind of, you know, was kind of flagging in here, was looking, you know, kind of maybe a little bit weakish, but the key was you had a nice 2 wicks in here. You're kind of holding in here a little bit. And then, you know, if you go to the weekly chart, you can see weekly chart still in this consolidation. So still opportunity for JP Morgan. So, you know, it's got to prove itself and it's got to get going. So, you know, it's not set up as well as Goldman Sachs. But, you know, from a fundamental standpoint, I really like JP Morgan. So, but you can see you got a touch here, touch here, touch here, you know, tried to break out, came back down. You know, now it's breaking out. You know, my theory on breakouts, right? We've talked about this. If you look, this is typically the way this works on breakouts. You get a pop up, right? You know, then they try to break it and then they come back down. They try to break it. The buyers give up. They come back down to support. Then they start and get going again. Then you get that big bar out, right? So, you know, coming back down to the zone, try to come up, fell back down, broke out, tried to come up, and now you're getting this big bar up here, but you know, it's not like this bar breaking out, so it's still got to perform next week. So, you know, JP Morgan not in the best position compared to Goldman Sachs, but this is the stock that we're holding a position in. And if you break it down to the hourly chart, again, over bought level 2. And so, you know, we want to see this 157 level hold in JP Morgan. If you're looking for another bank, you know, I don't like this bank fundamentally, but it is a good chart. It had been really breaking out of a nice long base, which is what you like. You got to love when stocks break out of these nice long bases. They can really go and do well. So you can kind of see Wells Fargo doing its thing, breaking out. So to me, at the top of this box, you know, this 47, 44, you don't want to see it back in that box. If you look at the monthly, you can see where Wells Fargo is in past comparison, because obviously, you know, they had, you know, some consumer issues, fundamental issues, and they've bounced off this. And, you know, well, this is Corona, but, you know, they've had some issues in here from a consumer standpoint. So that's another bank to look at. As far as, you know, I also have a position in the regional bank, KRE. You know, if you break it down, you know, look at the weekly, kind of breaking, you know, this nice little cup in here. So you had 3 straight white soldiers kind of heading up there. If you look at it from a daily perspective, you know, closing above the 50, which was important. So, you know, we'll see. We'll see if some of these stocks can, you know, really hold in here, but I'm looking for the banking sector to do well into next week. So looking for a little bit of a rotation, which means we may get a rotation out of tech. And let's look at tech. I mean, tech at highs, all-time highs. I mean, this is the S&P technology ETF. You can see tech is at highs. You know, if you look at QQQs, which is what we look at highs. And if you look at tech in general, let's look at some of the generals. I mean, Tesla, we had a nice little trade in last week in Tesla. We're out of that trade. It's kind of sitting just below that 700 level. I'm thinking it could, you know, it could fall back. I'm not as bullish on Tesla right now, but we'll see. Again, it's more of a rotational thing. Apple, looking like it's kind of wedging in here on Apple. And, you know, I kind of, would like to see, it's a shame we're getting this rotation because I think Apple could break out of this wedge, but we'll see with the rotational standpoint. And again, you're kind of seeing it coming back off RSI. It's still above 50, but it's kind of getting weaker, kind of wedging in here. But you do have a major product event going on in September. Apple typically tends to run into that. So giving rotation aside, I still will be looking at this play for a breakout from this descending trend line at some point, if it can, on Apple. Facebook actually getting, kind of broke down in this high volume node, kind of getting back going a little bit from this little breakout up here. It's, I'm not really that enthused with Facebook going forward. I mean, if we look at the monthly chart on Facebook, monthly chart still looks technically not bad in here. It did last month close below the prior month's high, which we don't like to see, but still, higher lows all the way through. So technically Facebook not broken. Weekly chart, again, last week, nice wick. Nice close above this congestion area in here. So the weekly chart looks a lot better on Facebook. I have no problem if you're looking to put a position on, but I won't be focusing on Facebook next week, I don't think. Microsoft just continues to be in this active sequence. And by the way, this is what an active sequence looks like, guys. When you get this nice little break above in here, here you're finding the 9 is providing support. Once it broke through here, this was a nice trade from 263, could have took it all the way up to 290, using the 9 EMA as nice support. You did have a value trade in here as far as a dip buy. Would have been a nice little dip buy if you were able to grab that. But right now, Microsoft, I'm not, again, kind of in that active sequence, a little late to the game, I'm looking for a little pullback in tech next week. So I'm kind of going to stay away. As far as other sectors that are looking strong, healthcare continues. Healthcare did pull back. I mean, just way overextended right up in here on this breakout bar. Way overextended. You had a reversal candle the next day, which was expected with RSI just getting so extreme. Nice little pullback last time. It kind of got up there. It got this nice little pullback in here, and then kind of went up to make new highs, and then brought us down to value. So, I think value can still come off a little bit more in here. So there is some good value trades to trade. Still looking, look, utility still strong, which is surprising to me. Actually, it's not surprising. Typically in a strong bull market, you don't see utilities lead. Okay, but really, I think what you got here is you got traders looking for yield. Okay, with rates being so low, that's really the game that you're seeing on utilities right here, more so than anything else. Semiconductors are all-time highs. I mean, we had just the trade of all trades in AMD. You can kind of see this 263.77 is the level I'm going to look at for it to keep on going. The interesting thing on the semiconductor index is look at RSI. Really didn't get above the above the 70 level. Really didn't get to extreme levels. And kind of a little bit of a divergence here. So making an all-time high up here, yet RSI not confirming. So it'll be interesting to see if there's anything to that RSI divergence in here. You usually don't look at it too much in the ETF sector, but looking into this grouping, obviously AMD was last week's trade. Okay, so looking at AMD, just looking on the monthly chart, you can see, what got us going, was last month. And again, look at this nice little wick. Once you got, and this is why it's good, guys, to look at the monthly chart, because this level 93.88 was the level. This is, you see this, and I'm gonna get rid of this. Well, actually, I'm gonna leave that for the daily, but and actually, I'm gonna get rid of it. Hold on one sec. So you can see this on the monthly chart. A nice, you got a nice monthly chart breakout right in here. A month and a half ago. So you could have bought this breakout at 84, topped out at 120. This is what you kind of want to look at, but if you wanted to wait in here, you had some nice action. And then of course, this month it continued it. And if you look at the weekly chart, it'll kind of give you a better idea. And again, another breakout on the weekly chart last week. the week before, excuse me, and you had a continuing week with now a topping wick to the top side. And what I really want to show you was going back to that, and actually go back to that monthly chart, and no, it was the weekly chart, I think. Okay, yes. So, you know, what's really interesting about this chart in here, if you draw this trend line in here, okay, and you got these two touches, look where, you know, this is, you know, we sold, I got some emails last week, Mike, how was it you were able to sell right at the top? Okay, you know, what gave you the indication? Well, it was this trend line here. Okay, this nice long-standing trend line from way back in 18, right here, from this top, went up there to the T and then reversed. Okay, so if you look at the daily chart, you can see went up to the T, reversed, and came right back down. And so we are continuing to come back down. It tried to break out yesterday on Friday, but couldn't get going. So AMD, I'm not really going to focus in on this one. I think it's got, you know, it's been manipulated a little bit. You know, you can see it was oversold level 1. Now it's working its way to the back to the downside, at where you had overbought level 2, pull back into the 20, overbought level 2, pull back into the 20. Overbought level 2, pull back into the 20. Overbought level 2, pull back into the 20. Okay, you see how this works, guys? I mean, this, you know, on this hourly chart, this 20 works really good. If you would have bought this breakout on the 200, which is what we like to see, you saw it come back down and find support and then break out from here. So you had many converging things pointing to this. And of course you had earnings, which, you know, kind of accelerated it out of the base. And, you know, AMD, nice little trade, but we're not trading it this week. NVIDIA, we traded NVIDIA positively last week. We were trying to play this break of this trend line, just really didn't go anywhere, went sideways, then finally broke out here. I'm a little worried about the semiconductor index going forward. I think it's due to maybe pull back a little bit. So I'm not going to do this trade, but NVIDIA is one that's actually looking okay and pretty decent. You know, it did split. The monthly chart, you can kind of see in here, it's flagging right now. Okay, and if we go to the weekly chart, you can kind of see it was on a breakout on the weekly chart, kind of what we were looking at. So, you know, I like this breakout on the weekly chart. So if you are going to play NVIDIA, you know, I have no problems with that. Just, you know, watch it in here. It is oversold level 2, you know, as you can see. You know, I would, this is a pretty decent level. If I'm looking to trade NVIDIA, I'd trade it off a dip buy off this 202 level. Okay, so you had a little kind of peak out in here on Tuesday, and then on Friday kind of came back down to that level, and you know, it's kind of, you know, sitting here after hours above that. So that's where I would play NVIDIA, see if that level can hold. MU, last stock I'll look at in this sector. You know, you got a nice little trend line break on this. You did have some nice volume break, but you know, it's just not exciting action in here. You know, it's not what we typically like to see in play, but it is holding in here technically. You know, if we look at the upper time frames, you know, you got the monthly trying to get a little bit better. You know, you had an open, and then you got these wicks in here, but these lower highs. So, you know, MU, not best to breed in here, but it is on the weekly and daily, you know, kind of breaking out, not with force, but it is kind of breaking out. You got RSI back above 50. So I definitely would be okay if tech is going to hold in there to possibly play MU as well, but I'm not in love with that going forward. As far as, you know, we also are starting to see the biotech industry ETF starting to get better. That is good, by the way, for small caps. That signals our play. And again, we talked about it, small caps, we may be playing a breakout in small caps to the upside of the trend. And IBB, the biotech industry ETF, is actually kind of, you know, confirming a little bit in here. Nice break out of a base. So that is good signs. We like to see biotechs be strong. We like to see semiconductors be strong. We like to see financials be strong. So again, for those of you looking for a market just to completely fall apart, not happening, because you still got oil, you still got financials, you still got low rates, you still got, even if rates pop up a point, you still are looking really strong with good underpinnings as far as this is concerned. So I really, you want to see biotechs go up. You're seeing it do well. Now, as far as energy, again, I'm not sure I would be in energy right now. Energy's still weak. There's two sectors I'm a little worried about. Okay, energy is one, because if the coronavirus continues to be an issue overseas, then I think you're going to see energy still underperform. And right in here, if you're, this is the trend line for me on the daily chart here. You get this break of this trend line, then, maybe you get a little upside swing and you get above the 50, then I'd be in energy. It's a lower risk play at that point. So I wouldn't be sitting in energy right now. I would be very careful with that going forward based off the coronavirus plays. As far as that's concerned. As far as other stocks, we talked about the Dow doing well. So obviously, you're going to look at some, maybe I would stay away maybe from we'll get into the reopening plays in a minute, but look, Alcoa looking pretty decent. Looking like, I like this chart, it's sitting above in here. If you look at the monthly, kind of getting better, starting to look a little bit better, had a nice little long wick in there. Weekly chart starting to look a little bit better. So Alcoa is one that could definitely get going. As far as steel's concerned, it tried to come up to this level and break out. On Steel Dynamics, you have a nice little trend line break that you can kind of play, and you just got to see if it breaks out. Same thing, really not getting much action in X here. We've traded United Steel a lot. It is above this nice little node here, so it's definitely set up if it wants to continue. So if you look in here, you got this long high volume node in here, so it is above it. It's holding above the 9. Everything's trying to get pointed upward. So United Steel could go, but I'd give it a little bit and let's see if that happens. Nucor is a stock that I'm in. We made some money in Nucor on the breakout of this high volume node. We made really good money. I don't know if you remember, basically beginning of summer, we played Nucor on a daily chart, a breakout here. We bought this bar in here. We owned Nucor all the way up through here. It was a really good, one of the biggest winners for us. We said it was underpinning to 100. It did. We sold, and then of course pulled back down, and it's what you expect. And you get it back down to value, and then you buy it back, and then you get a nice little run up again. So Nucor can be a good trader. It was a good trader for us back at the beginning of summer. Right in here, it's breaking out of a high volume node. It gapped up here. It's sitting on a nice little island in here. So I'm back in this position. I got back in pre-market on Friday, sitting up pretty nicely in it. So we'll see. We'll see if it can keep on going. That's one stock that I'm strong on. Deere, looking not too bad. If you go, to the monthly chart, you can kind of see it's kind of breaking out on this monthly chart here a little bit. If you ignore that top wick, again, weekly chart kind of doing this little cup and kind of breaking out. So, Deere, it's not a sexy name. It's not going to give you a lot of ATR, but it could be one that, could run and could get you some alpha if, we're going to see that rotation. I'd be careful, with the reopening plays. I know we're, the Jets, we're getting a little bit of a, a double bottom or a little bit of a higher there. If you look at Southwest Airlines, they're still, even though they've kind of bounced off these lows in here, they're still in a downtrend. There's still the 21 is still a lid. You still have the 50, you have the 200. So as long as Corona is going to be in play, I'm not as excited about these plays. RCL had some, pretty decent earnings, I believe, but still, still got a lot of underpinning to go to. Carnival Cruise Lines, same thing, still, even though the cruise lines above their 21 a little bit, I'm still not ready to get into the reopening plays per se. At least as far as the travel reopening plays. Going forward, just a couple more stocks here. Square was a big winner for us, and got to give Simon a call out again from our mentorship group. Way to go, Simon. We just, we were able to catch this nice little bar action. You had another nice little bar action in here. So Square, in an active sequence, if you look at it from top down out, you can tell I trade Square a lot with all those lines. But look, you had a nice monthly starting to get going again. Let's break it down to the weekly. You can see just you kind of got this this V in here. Okay. So interesting action in Square, but really, if you've looked at it over this just last year, it's just been in this big trading range after its breakout. So but it did print new high and pulled back, so we'll see if it can get going again. Look at the hourly on Square. You can see these nice defined breakdowns. Break it down, nice breakdown, and then boom. So it's breaking down again. So I don't know. We'll see on Square going forward. But the other payment processors looking pretty decent, starting to get recovered. Visa, nice bounce off a very important level for Visa. Also bouncing off of the 50 moving average. I love it when it bounces off of these, and it's kind of a look below and go scenario. So a look below and go scenario can really keep on going pretty hard, because typically this is where retail shorts. Okay, and then all these traders that shorted in here, once it starts breaking above, has to cover and gives you typically fuel to keep on going. So Visa looking pretty decent. MasterCard, looking okay, again, breaking above an important level a little bit, but, still got the moving averages overhead. Visa looking a little bit better. As far as other stocks, TTD, we were in a trade desk, but consider tech, online advertising. So, I'm a little leery of this one, even though it's holding its 9 in here. We played this last week, a couple weeks ago, nice little breakout out of here. But right now, not, I just worried about the rotation, but if it breaks this 84.72 level, and then, can hold above here, I think TTD could definitely, continue to go. The trade that we had, it was really good. The other trade last week was the seed break. We had a good trade here, 40% trade winner right out of here, out of this break, out of this nice little wedge on this daily chart, kind of flagging in here. It does have the 200 overhead. So, I am worried about that. But this is one that if you look at, right in here, okay, you can kind of see, and actually, let me kind of draw that a little bit better in here. All right, well, that's going to have to do it for me. But anyhow, you can kind of see, kind of went up to this level, and it's kind of hanging out. So a break above 13 could give you a nice ride up to 14.20, but I'd be worried right in here. So I'm going to be watching seed. It's not a day trader. It's more of a swing trade. We don't like these trades to have these little dashes in here, okay? Because you typically don't have a lot of volume, and sometimes the spreads get a little bit whippier, but still, it was a good trader for us last week on this break out of here. So edging up in here nicely. So it's one that you got to buy, you got to put it away, set your stop loss, set your profit target, and then just let it trade. And I don't trade many of them very often, but that's one that worked out really well. Snow, We played this on this breakout here. It was nice. We talked about how snow sometimes doesn't hold its breakout. Like this breakout we played before in here didn't hold its breakout. We played it here, didn't hold its breakout. Played it up in here, didn't hold its breakout. But it's actually kind of still holding above these moving averages, so I still like it. But you just gotta be careful. We get a nice good day in snow, then you may not be able to hold it for an active sequence. So snow's one that is acting a little bit better. It's holding the 9 moving averages are pointing up, so I'll be watching that a little bit. Retail is one that we do have consumer sentiment next week. Sentiment in a lot of these good economic reports have not been there. It's not been too good. So I'm a little worried about retail. It's kind of been toppy here, as you can tell by the retail ETF. So I'd be careful. There's some good retail plays. I mean, we played Under Armour really nicely out of earnings last week. It's still going, but the volume is decreasing, so I'm not going to play it, but is looking kind of decently. Best Buy, I like Best Buy. We traded it well last week. Typically breaks out of these high volume nodes really nicely. As you can see, it's kind of holding in here and holding this level. It could get going, but I don't know. We're gonna have to see. I don't like the fundamental thesis. Walmart was a nice breakout on Thursday, and then Friday couldn't hold it, but still not bad on Walmart. So yeah, it's a couple of them that I'd look at. And then Upstart, we've traded Upstart in the past off this trend line break. It's now trying to break out of a nice high volume node it's been in for the whole summer. So this is pretty nice sideways action. You see these wicks up here though. That's what typically happens when you try to break out of a high volume node. It's having a hard time, but when it gets going, it will get going and could keep on going. So this is one I'm definitely going to have on my list. And it's been in this nice little uptrend here. So it's one I'm going to have on my list, but we'll see if it can actually get that break and keep on going. So that's it, guys, as far as what we're looking at next week. You have CPI, we have PPI. I think we're going to get a little bit of a rotation. I'm going to be looking at rates. If rates continue to climb and it can get some momentum above 1.3, that could keep a lid on tech. VIX is pretty low, so the fears getting sucked out of this market. I am worried. The put call ratio a little bit high for me, so I'm on guard for a pullback. But again, with the indices breaking out of this nice consolidation in here, it's gonna see. It's not type breakout we typically see out of a nice long consolidation, but it is at highs, and you got to respect that. But we're definitely on guard. So, guys, with that said, I am going. If you can unmute yourself, let me know what you have as far as questions. That'll be good. So just if you have any questions, or if you have a stock then that you want me to look at, go ahead and fire away. Anybody?
Yeah, Mike, I was looking at this ANSS on the daily, this 379 area.
ANSS?
Yes.
Okay, let me pull that up. Okay, ANSS. Okay, interesting bar. Was this earnings?
That was earnings. Yep.
Okay, interesting. They gapped it down on earnings and then brought it right back up into the breakout level, which is the active sequence. That was what that tells me with such a high price stock like that, that some institutions came in here and bought value. So you can see value here. You got the 200-day moving average, and they bought value. You got the 50-day moving average, they bought value. So, and they brought it right back up in there. Interesting. Okay, so what's your question?
So I'm looking at that 379 area. If it can break it and get going, would you think that would be like a swing type play?
Yeah, let's take a look. So, looking at the monthly chart, really good action on the monthly in that it closed at its highs last month, right? So closed kind of at the top of this range. So this is a classic on the monthly chart trying to break out, and this is strong. So you have you see these wicks up in here, right? You see these wicks up, and they're trying to break out, pulling it back down, trying to break out. But here, strong action on the monthly chart. This is an earnings wick. So I'm not too concerned. Still higher lows as far as I'm concerned right in there. So monthly chart looking really good for a breakout. Weekly chart, same thing. So, if you look at the weekly, it's really interesting. So, really nicely there, and you can really almost go from here, right? And bring this up into here. So, you got nice action. So you got a nice support. So to me, I like this trade. I'd give the, probably the 350 area in here is the area that I would trade against. So definitely, and look, you got this, it's at the top, this 375.50 area. And if we come back down to the daily, so yeah, first off, positive reaction to earnings. Okay. Positive reaction to this wick on Friday. And if we go to the hourly, you can see we're above the 200. We're kind of holding the 20 in here. So yeah, I mean, to me, what I would buy is this 376.49 break. Okay. I'd buy this 376.49. If you're looking for a tighter stop, I probably would utilize the 20 in here, because it seems whenever it breaks the 20, it can actually get going for some points. So, I think if it can break in here, this level on the hourly, you got a pretty decent trade. So does that answer your question, Mike?
Yeah, it does. No, thanks.
Yeah, I like that. Any others, Mike?
No, that's it for me.
Chris, did you have something?
I got several questions, so.
I love it. Bring them on, baby.
All right, so all right, so the whole thing that you just did today, is this like an every Sunday thing that you do?
Yes.
To prepare for the week, you go through exactly what we did step by step, right?
Yes. So this is what we're going to do every Sunday, and this is what I go through every Sunday. Okay. Now, typically, Nick, our head of equity trading, is going to be on this with us, but he's, on vacation at the beach. But this is what we will go through every Sunday. And this is what you guys got to go through. Okay. It's a top-down approach, right? And so what you got to do is you got to be prepared, right? And have your levels and have your thesis, and, and look and see, what's ahead for the market, right? What could be some headwinds? And so, we definitely start off the monthly chart. We look at the weekly chart, we look at the daily, and we look at the hourly. Okay. They're the four charts to me. Okay. Right in there as far as looking from a top-down approach. And then you can get yourself some nice levels. You can see, because you also have a week that finished. Okay. So from a trader's perspective, you're always looking for information, right? The market is like a game. And the market general who's running the game is always leaving these clues. That's kind of how I play this, right? And so I'm always looking for the clues that they drop, right? And one of the clues they drop is okay, we now have a whole week's worth of prints. Okay, now we can take that week's worth of prints and compare it to the prior weeks and the weeks before that. So is there a trend we're seeing, right? And they are also, when we go to the indices, they are also now going to provide us levels to trade against. Okay, so you can see my yellow dotted lines. Okay, if I go to the weekly chart in here, I now have rearranged my lines. So I know, okay, look, here's my weekly high, weekly low. Here's the prior week's high and the prior week's low. And here's another, the week before that's high and the week before that, right? So I can see these levels tend to play well when you're trading the markets. And if you look at it last week, right? If you look at it last week, and you can kind of see in here, look, you can see how these levels, even on the hourly chart, they're pretty good levels, right? They're pretty good levels in here. And if you were to go down to the 1 minute chart and we were to, maybe bring this out, bring it out, they provided good, look in here, they provided really good levels in here to trade against. Okay, so, and you go backwards, you can see, look, nice levels to trade against in here, this level. So it gets you, I'm trying to give you guys an edge because a lot of people don't look at that, right? Just like a lot of people don't look at pivot points, a lot of people don't look at market structure. Okay, we're trying to give you that edge. And as we go farther into the mentorship group, I'm going to get more into market structure and pull up market structure as we get into. So we're going to build upon each week on these weekly sessions. Does that answer your question, Chris?
Yeah. So first of all, the 4 charts are monthly, weekly, hourly, and minute chart. Is that what you said?
Yeah, no, the 4 charts are monthly, weekly, daily, and hourly.
Okay. All right. So the steps you go through, just in my analytical mind, is that you look at the SPY, the Qs, IWM first at all
Yes.
those charts.
Yes.
Then you take that down to, I guess, all the ETFs and kind of look at where you're seeing, ups and downs. And then from that, you're taking it down to the stock level based off of who's in those ETFs, right?
Absolutely. So remember, one of the keys to being a successful trader, right, is to understand and quickly be able to identify rotation, right? You want to be where strength is. And so, the first piece, you kind of got different layers, right? So you got the indices are all a beast of itself, right? And yeah, occasionally I trade the SPY, QQQs, and IWM, right? But I trade them with options, okay? And I talked about one of my trades this week may be, if there's rotation confirmation, an IWM call, right? Because we may be able to break and rotate to the upside. But I don't know. That's just the thesis that we have, right? Now we got to see, well, what's the level? Does it confirm with the action that we get? Okay. And so you have the indices. Then you really got to break it down to sectors, right? You got to say, well, what sectors really are hot, right? And that really, it's its own beast and animal. Right. And then you got to get out of the sectors and you got to say, well, okay, knowing that we're seeing, okay, healthcare doing well, we're seeing semiconductors doing well. Well, I always say, well, go look at the leaders. Let's go find the leaders of those industries, okay, of those sectors. And then let's see if we got some stocks that are strong stocks that haven't yet broke out that could be, maybe playing catch up. And maybe we want to play the leaders. And so you're always looking for that rotation so you can identify where the strength is. Does that make sense?
Mm-hmm. Okay, so where do you get your weekly upcoming news? Is there like a website that you go to that says these are the economic news events that are getting ready to happen in the next coming week?
Yeah, so and I'm going to share with you guys our I have about 30 sites that I go and use research on. We have Bloomberg, we have the Bloomberg terminal that we use. We also have several news services, but there's also some really good, this is a hot market, right? And so there's a lot of good former hedge fund guys that have good blog posts. So I've put those together in what's called our playbook folder. And so starting the middle of next week, we're going to get you guys out our playbook, okay? So you can follow it. It's the same playbook that we use, but I'll just go through and it's constantly doing research, man. It's going to those same sites and just, pulling out, okay, when is, what's going on this week as far as economics, what's going on here. And I'm always looking for other opinions as well, but you got to be careful, right? You got to trust the stuff that you got to put like a filter and filter what actually goes through, that you allow through your brain, that you allow into your head, right? Because if you watch CNN, you would have never traded, right? The markets are falling apart, and you got to stay away from the financial media. But if you can find some really good, trusted, independent, good news sources And then you just put that against your own filter. That's what I do. So it's just doing a lot of research. It's just having a system to set your day up. And that's why we talked about when we're building your trading plan, guys. When you're building your trading plan, you got to have I'm teaching you guys how to create a process, right? A process to do this, a process to trade, a process to review. That's the key to being a really good trader, is having several good systems and processes that you do over and over that are structured.
So you mentioned that the Qs are weak.
Mm-hmm.
When you brought the Qs up and you were looking at your charts, nothing in there told me necessarily that it was weak. You see,
Well,
you're
no.
at the top of the range. So what made you think that Qs were weak? Did you have to look at your other sectors, all your ETFs, to find out, okay, there's some weakness in that area, and as a result, IWMs are going up? Because when I look at this chart by itself, I'm not seeing it.
Okay, great question. Okay, first off, just to clarify, I said that the charts, when I went through the charts, and anybody else can correct me if I'm wrong, but I said the charts look strong, right? I said this, the monthly chart looks strong.
I'm sorry, you said, I got it written down, rotation out of tech coming this week.
Yes, that's it. And I just want to clarify, right? So the charts look strong,
that's my bad,
right? The monthly, the weekly, the daily, they all look strong. I did say that the Qs were weaker on Friday, given what the SPY did, right? SPY was breaking out, the Qs kind of pulled back, right? And if we go to the QQQs and we look at Friday's action, you can kind of see they kind of fell off and were weaker. Okay, and if we looked at the SPY, the SPY, was a little bit stronger. Okay, just whippy action in here, by the way. So, and this is what I mean. This is what you typically don't see when you see a breakout of a high volume move. Okay, but remember, the other thing that's really the keys to being a successful trader is understanding relationships, right? And so this whole summer, this whole year, what relationship have we been talking about in relation to the tech and in relation to the Qs? It's been interest rates, right? And so now my whole thesis is that interest rates may put a lid on tech going forward if they're going to continue to rise, because we have Jackson Hole coming up at the end of August. Many people have theorized, ourselves as well, that you may see the first talk of tapering happening at Jackson Hole. So, with rates coming up, then that typically puts a lid on tech. Now, I did say rates can come up, right? Like when rates came up here, tech still was strong, right? Rates can come up. Okay, it's typically the velocity that rates come up, and it's also the context, right? So now we have a strong unemployment number, which could lead the Fed down the road of the tapering talk. And so that could lead rates to continue to rise rapidly, which could put a lid on tech. Now, if rates kind of, fall back, hang around here, they go up and they fall back and they're not doing much, but they are grinding up, tech can still go up under that scenario. But if rates gap up again, like they did here, on the non-farm payrolls news, and then they keep on, surging like they did, back in the beginning of the year, well, then, we saw tech was weak when this was happening, right? So my whole thesis is that, we could start to see that rotation. We could see a rotation out of tech into the financials, into maybe more of the industrials, and and tech could maybe have a little bit of lid. But that's just the thesis, right? Based off upon a relationship. But now we know what to look at, right? You guys know what to look at to really compare that. So does that make sense, Chris?
Yeah, right. I forgot about the relationship with the interest rates from back then, because that did happen. So that's a little bit of experience you got to have to know that.
Yeah. And remember, Chris, you've been with me since last year. We really didn't talk much about rates last year. Because the relationship wasn't that tight. You really didn't care about it, right? But this year, there's been a dramatic relationship. So, that's the key, being a successful trader, identifying those relationships that work. And this relationship this year has no doubt made us tons of money. And we've been ahead of the curve on that. Go ahead.
Why was the IWM so weak in the last week or so, but biotech has been kind of strong? You said that biotech is one of the IWM support group. Maybe there are others in there, but in the past we've talked about how IWM has been so weak, but biotech looked like it's actually been pretty strong the last few weeks.
Yeah, well, let's look in here. Okay, so let's look at this compare the weekly chart. So, the last 2 weeks, higher highs, higher lows. So really IWM since July, since the last 3 weeks had bounced off their lows. Now, if we compare that with the IBV and we take this to a weekly chart, you're kind of getting the same type of action. Now, the difference is, this is showing us here, and the difference is the components as well. Okay, so let me show you the difference. So this IBV, okay, has Myrna in it. Okay, look at Myrna over the last 3 weeks. It's just
So
below.
Exaggerated.
It's exaggerated by Myrna. You got what's the other one? You got Novax in there. You got, well, that hasn't done as much. What's some of the other ones? BNTX. Look at that surge. So, what you can look at is the XBI, and the XBI is going to give you maybe a little bit more of a more weighted approach, right? But you're still getting that pop up in here. You're still getting that,
Gotcha.
You're getting that pop up that's giving us the daily, it's kind of getting us going, and we're expecting it to get back up around here. So you're starting to see some action in it. But again, you got to be careful because Myrna, you got to look at the components, right? And that really plays a big play into it. But that's a good that was a good identification there.
One more last question. If you go back to your JPM chart,
Mhm.
to me that looked like you said that could be poised based off of the interest rates to break out.
Mhm.
One of the charts looks like a head and shoulders. Maybe it was the weekly or the daily.
No, the daily does. This looks like a head and shoulders right here, doesn't it?
Yeah, but there wasn't that one. It was another chart. It was another JPM, one of the other. But
Well, right here, and by the way, what a head and shoulders is typically, you see, you got the shoulder, you got the shoulder up to here, you got the shoulder building in here, then you kind of got your head right here, and then you would expect a breakdown, and a back down to this level on that shoulder. Okay, but it's a little bit flattish, to really see that type of action out of that. So let's go, if we go to the weekly,
yeah, that one. Look at that one. That's
yeah,
the one I was thinking of. Looks like it's going to be a head and shoulders situation.
Yeah, it definitely looks like it could be a head and shoulders situation. So, really the key is what negates that head and shoulders situation is if it breaks any further from here, which is the beauty of it. So we're not trading it down here, right, where it could be breaking down. If this falls back down below, then I'm out quickly in this one. So yeah, I can see that, head and shoulders right there. You guys see that, and it could definitely fall back down that way. But I think
tight is what you're saying on that.
Yeah, it's tight. It's tight. It's tighter than what you typically would see. So it's definitely at the top end of the shoulder, which a break above here, into this area will negate that completely.
All right, I'm done. That's it for me, Bob.
Awesome. Anybody else got any questions? Once.
Questions? Yeah, if we
Yes.
can go over some stocks.
Yeah, go ahead. What stocks you got, buddy?
You went over most of what I was looking at. The banks, JP Morgan, I had Nucor, Upstart. I do want to mention that Upstart does have earnings on the 10th. So that could have something,
Yes.
could react.
You're exactly right. So, we don't hold stock through earnings. So you got, is it in the morning or the afternoon?
Aftermarket. Yep.
Aftermarket on the 10th. Okay, so Tuesday after the close. So that could give us a good run into earnings. So, I will say Motley Fool right in here kind of gave it a catalyst. In here gave sometimes they give a recommendation they give and it kind of, moves, but you can see these. So I like that. So what's been a good play is playing stocks running into earnings, but we're definitely not holding through earnings. And that's a good point, Simon.
I just wanted to bring up Nike. What you thought about that?
I love the Nike chart. It's an active sequence breakout. What's up with the shoes, man? People must have shoe fetishes, okay? Because the shoe companies just, it just seems like they just rock and roll. I know Crocs the same. We traded Crocs and traded that breakout up in here. Look at this, just crazy. I don't even know anybody wears Crocs anymore. But Nike. This is an earnings gap, I believe, right up in here. This is what you call a pro gap up. Okay, it's a pro gap because it's holding the gap, right? And right now, if you're buying Nike, I can't do it. I just can't do it. You start to get RSI maybe diverging a little bit, but I don't know. It's if you own that. If you bought Nike, the time to buy Nike, right here, if you missed the gap and the go, was at this little, back out of value here. So broke below, found value, and once it broke through here on this 162.90, closed at highs. That would have been a nice trade. Could have sold up into strength, bought back into value, and then just let it ride. So, but right now. I hate, chasing strength. Look at the monthly chart on this, guys. Okay. Just monthly chart, just incredible breakout. So, I think we're behind the 8 ball on this one. And I think, retail, I don't know. I think retail's just kind of churning a little bit, but obviously Nike's not. And I think you get a little bit of a short squeeze in here. Some people came in shorted Nike because of the China situation, and I think they're going. But I can't define my risk in this one. So if you are, and again on the hourly chart, the 20 appears to be good value in here. It is below the 20, so you kind of, if you wanted to day trade this a little bit, maybe you'll break above the 20 and above here. If it holds this line, you could play maybe this breakout and then use the 20 as your exit scenario. But I'd be careful at this point.
Last one, Square. I just wanted to know what you were playing against because
you're just showboating, Simon.
No,
you're
no,
just you're showboating. You had the call out of the week, and right in here. Look, huge. I know a lot of pros that got screwed up on this one, right? Because this was a tough stock to trade from a pro perspective, because they had earnings they came out with over the weekend. They had actually they announced that they were doing a purchase of this. Really, nobody understood why they were purchasing this company. I forget the name of the company, and they were doing it with stock. And typically, when a company uses their own stock to purchase a company, it typically has a negative effect on the company. Okay. But this, obviously, you get the opposite. You get this jam right out of here, which was a nice trade. So a lot of pro traders, it went against all the rules and just, completely got caught on the wrong side of this one. But, we didn't, because we had Simon in our group. So we caught this one. Look, it's okay. It's at the breakout level. Okay. So the high of this point is 283.19. So right up in here, it tried to break out the high up there, right? And it tried to break out here and it didn't do it, but it held pretty nicely. So I'm probably playing that break again if I'm playing square, to be honest with you. If you look at the monthly chart, you can kind of see, I don't like these wicks to the upside, but still nice full body candle in there. Looking at the weekly chart, I'm a little torn on square, because I think it could definitely fall off from here. I think it's gone a little too far too fast. But it's proven to be it's proven on the hourly chart. I probably would trade it off the hourly chart, Simon. And, I would kind of look and see, again, if it proves, when it's gone, right, out of these wedges. So, this is not one that's traded up. These are just exploded up, as you can see. So, it's hard to play that action. You got to get on the elevator when it leaves. So I'd be playing and watching the hourly chart, and when it breaks the trend line here.
So, so this is a scenario. I want you to, what you think about this scenario. So off the rise up of, what was that? 8.2, and then it pulled back sideways, and then another move. So this would be the second move, right?
Yes.
So, and also if you look at the volume, the second green candle is substantially smaller.
Yes.
There's less volume in that. So I'm thinking that since it's the second move, people avoided the first one and they're in on the second one. So maybe playing the break of, what was that, Thursday, the close to the upside, or close of Friday for a short. That's what I was thinking.
Yeah, I mean, be careful, because if you're you're playing the close of Friday. Okay.
That's right.
Yeah. If you're playing the close, yeah, I mean, look, the close of Friday. Yeah, I mean, I would definitely, that wouldn't be a bad short. Have a quick stop loss to you, with you in there. What's interesting, let me kind of get rid of this here. Remove drawing. So you have a high rate here at 274.95. So 274.95, and the close here is all kind of right within itself, right? So I would almost, and then you got this 273.42 or something in that area. So yeah, you kind of got these two areas right in here. So that would be a good break, and then play it down to 269. I like that, Simon. I like that I like it from the short side. Just be careful when you have a stock that, when you're shorting, okay, and you got a stock that does this, you got to be very careful and very quick with your stop losses.
Yep, got it.
Very, very quick.
That's it for me.
Anybody else, man? Anybody else got any questions? Desire, are you trying to talk and you're muted, or
So yes, I have a question.
yes.
So I would like to know if there is a relationship between the stocks. For instance, in a cryptocurrency, when Bitcoin went into the bullish, other cryptocurrencies goes up. When Bitcoin goes down, also other cryptocurrencies most of the time goes down. Is in the stock, there is a stock that can goes up, other stocks goes down, or a stock is independent?
It could be independent, right? It could be independent. And the thing is that, relationships can come and they can go, right? And so your key as a trader is just try to identify, when those relationships are important to the market and when they're not important to the market. And a lot of that is just experience, right? And you were talking like Bitcoin and, Ethereum, they're, and we talked about this the other day in your personal meeting, Desire, right? That, it doesn't matter what you're trading, they all follow kind of the same rules, right? And so you're getting this, Ethereum is breaking out of a nice little chart here. You got Bitcoin, breaking out a nice little chart here. And, you're getting some nice action in some of these, cryptocurrencies, and you're still using the same analysis, still using the same relationship rules.
Yes. So I have also on the stock which called the snow. I have a problem on the snow.
Okay, you have a problem with snow. I like that. What's the
Yes.
problem?
So I would like to know, how do you take a position while you use all those support and resistance levels?
How do I take a position? So, you know, typically we're using our positions based off of the hourly chart is what we're looking at. So if I'm trading snow here, you know, the interesting thing about snow is the Thursday's high, right? So Thursday's high is like right here. So it's so close. And then you got a high, Friday's high, which is kind of right where Thursday. So you got two highs, very, very snug right in here. So I kind of want to show you guys, you know, if I'm trading snow, I'm trading it off this break here of this level. You got two highs sitting at the same area. And this is a good trade. A lot of times, A+ trade setups is just being able to have levels to trade off of, feeling like you got an edge, right? So for me, what's setting snow up for me is a break of Thursday and Friday's high, and then my stop loss is really close by, which is this level right here on the daily chart, this 277.29. Okay, and if we go to the daily chart, you can see what that level is, and it goes all the way back, right? All the way back, you know, pretty far to the left. So it gives me a good level to trade off of. So I'm trading a break of these and a support of this level, and also, you know, a secondary support of this 20. Does that make sense, Desire?
Yeah. Yes, that is makes sense. Also, an additional question. Yes, I have another question.
Yes, go ahead.
Yes, what are the factors that push you to go to short a stock or to buy a market?
How do I decide to short or buy?
Yes.
Yeah, you know what? It's depending upon, well, look, you know, we talked about it. If a stock on the hourly chart is above the 200, okay, I like to go, that lets me says, okay, I like to be long a stock, right? That's one of the first things. The second thing is when a stock is stacked up. So let's go to the, you know, like the SPY, right? You got the 9, you got over top the 21, over top the 50, over top the 200. So when I have all these stacked and running, and this is in a nice, what we call active sequence going up. So I really like this setup here. Okay. So that's what we look at. We look at the daily. That's why we do a top down approach, right? Because, excuse me, A+ setups is when everything is incongruent, everything's speaking the same language, and you got several levels sitting at the same area. And then, so what that does is it gives you the thesis, right? But the question is, you got to know what levels, you know, must hold in order for that thesis to be strong, right? In order for that thesis to work, right? And so for me, and let me think if I can think here of a stock, you know, that we were just looking at. Well, let's go maybe to Upstart. We're looking at Upstart, right? And so if Upstart was to, you know, fail, okay, the 50 here, and then fail this high, this now negates, now I'm in maybe a short biased thesis compared to where I'm looking at this from the long side, right? So I got the 50 as support in here, and I typically, you know, if a stock breaks below the 50, then I'm a little bit bearish on that stock, okay? And that's an important level. You know, if I go to the hourly, you know, I can see, you know, right here, it's kind of, you know, it's holding above its 200 in here, and, you know, doing pretty well and going, you know, nice ascending highs. So that gives me the bullish thesis. So there's a lot of things to go into, whether you trade it to the long side or the short side. And a lot of times you'll see when you start getting our playbook, there's some stocks I'm set up from a day trading standpoint that if it breaks one way, I'm going bullish. If it breaks the other way, I'm shorting. Okay, it's all about knowing your levels and knowing how to read. And we talked about it when you're day trading, right? You got to utilize it. We called stacking the levels, stacking the levels. Well, the first piece of information we get, you know, once we're into the trading info, you know, other than the pre-market levels and the pivot levels, we're looking at the opening print, right? We have the opening print, and then you have the prior day's close. There are levels that are important to help dictate what the market is doing. Are the bulls in charge or the bears in charge? I mean, you know, and then we're trying to stack those levels to one way or the other to give us either a short bias or a bull bias.